In this presentation, we will calculate the break-even point. In prior presentations, we used this data to calculate the contribution margin total, contribution margin per unit, and the contribution margin percent, as well as in decimal format. Now we're going to go on to the break-even point. This is going to be the standard stuff that happens with this type of information. The break-even point is kind of our starting point. And so we need to first break our information down into variable cost, fixed costs, then calculate the contribution margin in its various forms, and then we typically move to the break-even point. In other words, you want to basically, whenever you get this information, just think and make it routine that you're going to break whatever information that's given. We're going to put that up top. We're going to use that as our referencing point to go to, and then we're going to break this information into the contribution margin, and then we're going to break it out into the break-even point type of calculation. Just make that standard. Even if the problem doesn't ask for it, just start practicing going through the whole system, because remember that any problem could ask you for any of these points, and our goal is to be ready for any kind of scenario. So anytime, any information we want to just crank out all this information that we can get from it, and figure out how we might be able to get into these same numbers with limited information, because we know that that's how multiple choice questions are typically asked. So we have this information up top. We calculated the contribution margin. So we said, all right, here's the sales, here's the variable cost, here's the contribution margin, and we got the contribution margin percent there as well. What we really want for the break-even point is the per unit numbers. So oftentimes when we're asked the break-even point, they'll give us these numbers, and notice they didn't give us the sales per unit or the variable costs per unit. And that's what we have to break out here. So the second calculation helps us out with the break-even point, because we took the totals, we divided by the number of units, and therefore we got the contribution margin per unit, the sales per unit, the variable cost per unit, the contribution margin per unit. That's the important number. And when you visualize this, when you think about this, why is this number important? Because if you break out the fixed costs and the variable costs, you can think about this is what you're clearing on you're clearing the variable costs by the sales price, $27. You're earning $27 over the variable costs with each unit that we sell. So every unit that we sell, then we're making $27. And you might say, well, wait a sec, what about all the other costs, like the overhead type stuff usually, or the fixed costs, like the rent? You're not taking that into consideration as we would if it was a cost of goods sold number. That's true, but look what we can do now. We can say, okay, there's that 27 per unit that we're getting. How many units now do we have to sell to clear those fixed costs, those overhead type costs usually, because those are the type of costs from a traditional standpoint that often tend to be more fixed. Things like the rent and stuff like that, that are usually kind of fixed. They don't have to be fixed, but note that those are the kind of costs that could be fixed. So usually the rent is the easiest thing to think about. So I'm making $27 over the variable costs per unit. How many units do I have to sell in order to clear the fixed costs, like the rent? What do I got to do to pay the rent here? So once we have this number, it'll be easy to do. I'm just going to say, I'm going to highlight this number and say, all right, we're going to have the break-even point in units. Now, we're not talking about dollars right now. We're talking about break-even point in units. How many units do we have to sell at $57 that has a contribution margin per unit of $27? Okay, so now we're going to say the break-even point is going to be calculated as, we're going to take the fixed costs and total fixed costs, and like the rent, and I'm just going to say this equals, and we're going to pull that from our data. That'll be given in the data. It is what it is. The rent is what it is. It's not a very interesting number. It doesn't change too much. It is what it is. Then we're going to have the sale, and then we're going to have the contribution margin per unit. Contribution margin per unit, and that's going to be, if we didn't have this number, we'd have to calculate it. Sales minus variable costs per unit. Sales per unit minus the variable cost per unit. In our case, we have it here at the 27, and that will give us our break-even point in units. So we're going to say this equals this number, the total fixed cost divided by the contribution margin per unit, and there we have it. And again, you might want to break out what are dollars, what are units here. This is a dollar amount, so I'm going to format this and say this is currency dollar. This is in units. Notice, are there decimals involved here? There are decimals. So again, just be aware of that. It's going to mess up the calculation a little bit, because if we did this by hand, 153,900 divided by 26.79 is going to be the 5744, which means there's dollar signs here. I mean, there's pennies here. And you might say, well, why don't you put the pennies here? Notice it doesn't solve the problem because there's more than pennies here. It's not perfectly rounded. So just use Excel. You need to use Excel, and note that you're going to have rounding errors. If you're off by a few dollars or something, or some error that could be because of rounding, just be aware of that. It's always going to be there. So just be aware that it's going to be there. If you see the problem and you calculated such as this, and you're working without the pennies, 153,900, and you said divided by 27, then you're going to say, something's funny there. And then you're going to go in here and say, well, what if I add some more decimals? Well, that should be closer then. So we're going to say, all right, 153,900 divided by 26.79. And so now we have a closer number. Again, there's always going to be decimals. Let them be. Note that what we're doing here is we're estimating. So in real life, when we have these decimals, we're gonna say, hey, this is close enough. This is where we want to be. This is about right. We're estimating. The whole concept of variable cost and fixed cost in and of itself is an estimate. It's our best guess. We're trying to work with the numbers by behavior, even though it's not a perfect system. And so we're going to measure the pros and cons with it. Okay, so these two, remember, this is going to be a dollar amount as well. So I'm going to format this one as a dollar. I'm going to make it currency, add the dollar, and I'll remove the decimals from it. And we can then format this. We can make this, put some borders around this maybe. We can make it our blue if we want to. Say that's where the data input is. We can make this possibly black if you want to. And again, the formatting is not as necessary to get down, but just you want to be able to work with Excel and maneuver around this thing. So now we want the break-even point in dollars now, not in units. Now the easiest way to do that is to say, we know we have to sell this many units, and we could underline this to underline. Now I'm getting picky. Okay, so we have the break-even in units. The easiest thing to take it down to dollars is just to take that number and multiply it times the sales price. That's going to be the easiest thing that we could do, and I'm going to call that method 1. So method 1 to find the break-even point in dollars is just to take the break-even point in units. So I'm just going to say this equals that 5,745 units we need to sell, not times the contribution margin, but times the sales price. That's how much we sell them for. So this is units. I'm going to pick up the sales price, how much we sell them for, $57. Again, I'm going to format that as a dollar to remind myself that that's dollars. And that will be the sales price. I'm going to underline this now. And then we're going to say, okay, there's 5,745 units we have to sell at the sales price of $57. We'll just multiply that out. If we sell 5,745 units at $57, then we're going to have the break-even point in revenue. The amount of revenue we're going to earn is that $327,447. And that'll give us our break-even point in dollars. And again, I'll go through the process. I'm going to go home tab. Let's go ahead and double underline this. Let's make this maybe blue to keep along with our formatting on it. Right click, and we're going to make it blue. And we'll put some borders into it. We'll make this, let's say, black and white. Okay, so that's going to be method 1. Now, that method makes the most sense to me. It makes the most sense to say, okay, that I've got the units I need to sell times the sales price, and that's how I would get the break-even point in dollars, meaning this would be our sales revenue, meaning this would be line 1 of the income statement, sales revenue, line 1 of the contribution margin income statement, sales revenue. But there's another method that we need to know because it's useful for number 1, and also it's often going to be asked questions on in test formats. And you might say, well, I'll just use this method, but you can't because it's not going to give you the information to do that. So you have to know the second method, which is going to be the fixed costs divided by the contribution margin percent. So we have the contribution margin percent. They might just give us in like a multiple choice question, they might just say, hey, here's the contribution margin percent, and here's the fixed costs and some other random data. And now we want you to figure out the break-even point in dollars. And you're not going to be able to do this method because they didn't give you the data to do it. We would be able to do it in real life in any method we would want because we would have all the data. but book problems want us to kind of manipulate the data around. So, and it's useful in real life to know how these percentages and ratios work. So know the break-even point method too. So here's going to be the second method we're going to have, and we're going to start here with the fixed costs. Fixed costs, and that's going to be given in our data set. We have it in this calculation up here. So there's our fixed cost. That's, of course, again, in dollars. So I'm going to right-click and say, all right, that's in dollars. Currency, dollars. And then we're gonna divide that by the contribution margin percent. So we're going to divide by the contribution margin percent or ratio. And we calculated that here, we calculated that here. So we can calculate that based on the total sales compared to the variable cost, contribution margin over sales, or per unit, the contribution margin per unit over sales. The same 47, again, take into consideration rounding. So if I say, notice in Excel, if I say this equals this 47, it turns out to be 0. Why? Why is it 0? Because it's not formatted as a percentage. So just be aware that we're always going to have to deal with that. And it's just practice for us to understand. It'll help us to know, a percentage is the same thing and a 0 is the same thing because it has no decimals. So we're going to go Home tab, number. We could add decimals. Oh, there it is, right? And if I want to make it a percent, we got to go numbers and percentage. And there's our percentage. So then we're going to calculate the break-even point. So I'm just going to say this is the same as this cell. And if we were to do this with a calculator, you would say 153,900 divided by 0.47 because it's a percent, and you'd get something that's not perfect. It's not a perfect world. That's okay. And so we'll do that here, equals this number divided by 47%. And we get this number, again, it's rounded. So notice it's rounded. And if we wanted to see the pennies, we can see the pennies. But again, adding the pennies isn't going to solve our problems because the pennies are not all that's there. There's more. There's always going to be a rounding issue. We're talking about estimates here, estimates. So we're okay with rounding, which is aware of it. Okay, and then we're going to highlight this. Put the borders around it. We're gonna say, here's some formatting to it. Make this maybe black and white again. And there we have that. We can do some underlining possibly, because that's good times. It's good times to underline stuff. And so there's our method. Our goal here is to be able to set up these tables. You don't have to format them all nicely, but you want to basically practice being able to set up tables. If you had to do this by hand, then you're visualizing this grid and this table, and you want to practice over and over the grid and the table so that you can do it by hand very slowly, by hand. You can do it very fast once you get good at Excel multiple times over and over, so the visualization of the table is there. That's what you need. The next thing we can do is we can test the break-even point. In order to test the break-even point, we'll put together a contribution margin type of income statement. So remember, we're always working with a contribution margin type of income statement, and not sales minus cost of goods sold, but sales minus variable costs gives us the contribution margin. We can compare that to the fixed costs then. So this is going to be our break-even point test worksheet. And remember, our normal kind of layout is always going to be this. So this is going to be basically our contribution margin income statement, our CVP type of income statement. We've got sales, then we've got variable costs, and that's going to give us our contribution margin. And this is going to be similar. Again, if you think about the normal type of income statement, it would be sales minus cost of goods sold gives us gross profit. Well, here we have the sales minus the variable costs gives us the contribution margin. Then we compare that to the fixed costs, and that's going to give us then our profit number. So in our case, if it's break even, we expect the profit number to be 0. When we consider this type of income statement, this contribution margin income statement, it's useful to think of it as a per unit basis and then calculate out the total numbers. So in other words, if we say per unit, we're considering the sales per unit. What's the sales per unit, or what's the sales price per unit? We said up top that was 57. So 57, that's what we're selling them for each unit. So we're going to say, all right, there's the 57. And then we're going to say the variable costs, as we see up top, is the 30. So we're going to say, okay, this equals the 30. And then we're basically recalculating the contribution margin per unit. So this equals the 57 minus the 30. And then we're going to say, well, how many units do we have? And this is where the break-even component comes into play, because we calculated the break-even in units up top, 5745, and then we calculated the dollar amount. So we're basically, in essence, recalculating the dollar amount with the units using method 1 by saying, okay, the number of units is going to be our break-even unit amount, 5745. And then if we multiply that out, then we're going to say, okay, the 57 times the 5745, be mindful of the rounding, is going to give us the 327,447, which of course is this number here, and this number here, which is our break-even point in dollars. So this is in dollars. So if we consider this and format these items, these are in dollars, and this is units, and these are going to be dollars over here. So this is in dollars. So if we format the cell, if I can find that, in dollars, make that a little bit larger. All right, and now we're going to do the same thing for the variable costs. Again, the units are the same. That's the point. So we have the units, and we could do this unit multiplication thing all the way down to the contribution margin. So we could say, all right, so this one's is going to equal the $30 variable cost times the 5745 units. If we widen the cell, then we have this item here. I'm going to remove the pennies. So I'm going to go to the Home tab, Numbers, and remove the pennies. So take it back down to here. Now this number we could calculate two ways. The contribution margin total now could equal the 27 times the 5745. That's nice. We could also calculate it as equaling the sales, total sales, minus the variables. And that's going to give us the 153.9 as well. So we just need to pick one of those. Then this is the fixed costs. All right. So fixed, let's even put costs here. And now the fixed costs, we're not going to be able to do this kind of multiplication thing, but it's even easier. We don't need to, because the fixed costs are nice and easy. That's the point. Up in our data, way up top, the fixed costs are what they are. It's the rent or whatever, right? It's the fixed costs. Things don't change on the fixed costs. They're fixed. And notice it equals exactly what our contribution margin is. And that's because it's the break-even point that we're checking here. And therefore, our profit is going to be the contribution margin minus the fixed costs. So that's evidence to us then. We just cranked out like a contribution margin type of income statement to test that our break-even point in both dollars and in units is correct. Break-even point in dollars, break-even point in units has now been verified with this worksheet. We can clean it up, make it nice. We're going to right-click on it. We'll make it blue. We'll put some brackets in it. We'll make this type black. We'll make this black and white like so. There we have that. We might want to underline this and this. I'm holding down the control to get those cells that aren't next to each other. We can underline this. We can put a double underline here, and something like that will give us our check figure.